Hey everyone, welcome to episode 30 in my monthly series where I review some of my favorite high yield income oriented funds that are designed for consistent passive income, which I feel have a great value this month, and where I'll give you a quick monthly commentary on the overall stock market like I saw it. So if you're new to the channel, welcome. I'll go through a quick couple of reminders before I give you the monthly stock market update. But before I do that, I want to tell you about the brand new format of the series. So I decided to change the format. So my previous format was I would literally present three specific funds, which I feel would be undervalued. One on the US stock market, two on the Canadian stock market. But I feel that I could do much better and it would give you much more value if I do more of an overall take and pretty much go through all my favorite income-oriented funds on both the Canadian and US stock market and tell you which ones are a good deal, because focusing on only three I feel is a bit short-sighted because everyone's trying to build their portfolio, right? A diversified portfolio. So instead of just focusing on three and having the same ones reoccur month after month, I figure I give you more of a bird's eye view. So I hope you enjoyed the new format. Of course, let me know what you think in the comments section below. I think it'll be much better and much more efficient going forward. So this is definitely not your ordinary stock pick video, right? Or investing channel, by the way. So let me just say that right off the bat. My investing strategy is pretty different from everyone else's, and the funds I'll review are different as well. So there won't be any single companies, any single stocks. I do not invest in single companies anymore. I only invest in funds, so ETFs, closed-end funds that are designed to they're really designed to provide high yield and income. So they're income oriented, so they're not growth oriented, right? So many of them, most of them, if not all of them, use income enhancing strategies. That's basically the difference between income oriented and dividend oriented. So when I say income enhancing strategies, I'm talking about covered call strategies, leverage, or a combination of both. So dividend strategy is only dividends, but income is combination of dividends, covered calls, which and amplified by leverage. So there's a lot more income in there. So the primary objective of this strategy is to generate relatively safe, consistent, and high passive income forever. And one important factor of my strategy is to invest consistently over time. If you invest consistently over time, you will capture what is undervalued in the market, right? So you could do this either via the drip or you can manually invest every month, kind of like what I do. So remember that I'm not against the growth strategy or the dividend strategy, which are very, very mainstream strategies and work long term. But my channel really focuses on the income-oriented strategy. So if you want to learn more about, the three strategies where I compare them and where I talk about the pros and cons for each, I have a video for that. So make sure to check it out. Very easy to find. You just go on my channel, search growth versus income versus dividend, and you'll see it there. So also, of course, this is a monthly series. Don't forget to check out my previous month's picks as well, or overview if you missed them. So it's very easy to find them because I have a whole playlist, a specific playlist dedicated to all my picks of the month series, which is now going to be completely different. It's going to be more of an overview. So in terms of the stock market summary or stock market update, I mean, the volatility pretty much is continuing here, especially near the end of August, right? We had a couple of red days, a couple of crazy days. There was a small rally in mid-July to mid-August. I was looking at some videos online, even though I usually don't do that, and I heard a funny term called a bear market rally. I found that pretty funny. So the experts, are always trying to find new ways and to try to explain things. A bear market rally. So what does that mean exactly? A short rally within a bad or a bear market. So I found that pretty funny, but these guys are always just trying to explain everything. The truth is that inflation concerns are really what's dominating the headlines. You have the Fed that's basically predicting or estimating that there's going to be some pain ahead, which probably means further or aggressive interest rate hike. So this is the time where I'm super happy to be an income-oriented investor, or a buy and hold investor, right? Someone who just buys and holds for the long term, doesn't need to sell anything later on and just collect your income, right? I really don't care what's happening in the market, to be completely honest with you, because I'm getting my income month after month, no matter what. Whether I use it, whether I reinvest some of it, or whether I drip it, it's all helping me, and I'm getting my realized returns now instead of being dependent on what the stock price is doing, what the stock market does, like a growth investor, especially, right? So there's going to be a lot of deals great deals coming up, and hopefully they, if inflation concerns stay and the market stays choppy, I'm actually happy about that. And if you're like me, if you're an income oriented investor that reinvests or consistently invests, you should be happy because we'll have more and more months of great deals, so we could increase our yield and dollar cost average. So I hope you guys enjoy the new format. Of course, let me know what you think about it in the comment section below once it's done. So without further ado, let's check out an overview now of my favorite income-oriented funds on both the Canadian and the US stock market. All right, everyone, new format, very excited. Let me give you an overview of the best income-oriented funds on the Canadian market first. So we'll start with the Canadian listed funds first. If you invest exclusively on the US or American stock market, you could just skip to the US part by using the YouTube chapters below. So we're going to start with what I like to call the big six. So these are the big six positions in my portfolio, in my main portfolio, which is my TFSA and cash accounts combined. So the big six combined make up about 65% of my entire portfolio. So of course, we're going to start with HYLD, HDIV, and HDIF, the three all-in-one covered call ETFs with 25% leverage. HYLD, HDIV from Hamilton, of course, and HDIV from Harvest. So, these ones, because they're ETFs, everyone, they're not like closed-end funds. You don't need to look at the NAV and compare it to the stock price to see, which one has the best value, because they're ETFs, they're open-ended funds. They'll always trade near the NAV. So all three are always pretty much good to get. But right now, the one really sticking out, or the one that has the most value, in my opinion, is HYLD, because it is the one that's a little bit more tech focused, American focused. And once again, when there's fear in the market, the sector that gets pummeled the most is the more speculative sector, right? Which is technology. So HYLD it definitely has the biggest bang for your buck, in my opinion. It's my biggest position. I would have to say out of the three, it's my favorite one out of the three, because the yield is really high. And of course, it has QYLD, RYLD, XYLD, the big three on the US stock market. So I recently checked here, and I'm filming this on August the 29th, which, had a bad couple of days. And right now it's at 12.97. So this is pretty much the lowest point it's ever been, 12.97. And the yield is incredible. It's just under 13%, believe it or not. So out of the three, they're always good to get, of course. All three of them are always good, but for value, you're definitely, I think HYLD takes the cake here. HDIV and HDIF are both between 9.5% to 10%, so definitely not slacking for sure. EIT, so EIT is a closed-end fund, and this one usually always trades at a small discount, which is the case right now. You see it's worth 13.09, that's the NAV, and it's at 12.91. This could be one day old, but it's typically what it does. And EIT, I wouldn't say has the most value right now, simply because it's more energy and financial focused, which are not doing so bad. It has zero technology. So this is what's really helping Canoe EIT to do extremely well, simply because, it's very heavy on the financials, energy, materials, healthcare, and it has zero technology. So this is why it's been doing pretty well. So, always good to get, of course. It's always going to be one of my favorites and part of the big six, but definitely not the one that has the most value right now. So going on to GDV. GDV is, my favorite split fund because it's beautifully diversified sector and region, but it's about 11.37 stock price, but the NAV is 8.73. So I think the premium is too big. You're paying too much of a big premium. I think it's over 20%, even close to, it's about 30% premium. I'll just calculate it real quick here. So to figure out the premium percentage, or how much premium you have to pay, compared to what it's worth, just take the big number divided by the small number. In this case, it's the stock price divided by the NAV, minus 1 times 100. Yeah, there you go, 30% premium. So GDV, although it's part of the big six, not much value right now because the premium is fairly big. Last but not least is RS. So RS is my go-to for real estate, and this one also is trading at a premium. I actually wouldn't be surprised if they keep doing overnight offerings, because it's worth 14.02, but you got to pay 16.42. So it's staying relatively strong, and the premium it's fairly high. So out of the big six, HYLD is definitely the one I would be adding more to. And that's the big six. Let's go through the other ones. Let's go through all the split funds now, everyone's favorite, right? So if you look at the Brompton I love Brompton's website because we could actually see them all here. So SBC, it's trading at around $11.99 and it's worth $10.41. So the premium is not so bad for SBC if you want to pick some up. LBS also trading at a premium, right? It's trading at $9.12. It's worth $7.80. GDV, we went over it. LCS, I wouldn't suggest it. Misses too many dividends. All just life insurance companies with in a split fund. Doesn't seem to work all that well. DGS is not so bad, but you're still looking at a premium, right? It's $6.92 and it's worth about $6.08. Not so bad though, not so bad. The one that really stands out a little bit more to me is PWI, the Sustainable Power and Infrastructure one, because it's $8.45, but the NAV is $7.85. So the premium is actually pretty small. So PWI would probably be the Brompton one for me that has the most value, the Brompton split fund right now. That has the most value, but it's pretty defensive, right? It's sustainable power and infrastructure stocks, so real assets, utilities, industrials, really I call them salt of the earth businesses. DFN. So DFN, unfortunately, Quadravest only updates their NAV prices every 2 weeks. So we only have the date of August 15. Unfortunately, you see here NAV net of distribution. This is the unit NAV. So to figure out the NAV, you would just take out $10, and the approximate NAV of the Class A shares is $6.73, and it's at $8. So definitely trading at a big premium. I think a smaller premium than DGS. So DFN, I would hold off a little bit. FTN seems pretty interesting to me, guys. This is the one that stuck out to me in terms of Quadravest split funds, because it's $18.75. So the Class A NAV is going to be about $8.75. And the stock price is $9.10, and this one just had a recent overnight offering, so you pay $9.10 and it's probably worth $8.75. Of course, keep in mind this is August 15th. It's probably going to be a little bit lower, so not much of a premium here. So FTN probably takes the cake, in terms of good value split fund on the Quadravest side. BK, which is SBC's competitor, same deal. It's at a premium. It's worth about $11.73 value, and it's at $13.59 stock price, so a big premium there. So FFN and DF, the higher risk ones, the ones that are under $15 unit NAV, are also interesting because, like you could see here, if we take the latest date, of course, August 15th, remember it could probably be a bit lower now. So 483, right, the unit NAV of the Class A, and it's trading at 444. So this is showing that this is currently trading at a discount. So if of course, fortune favors the brave, you got to expect to miss dividends, and I don't know when they're going to be reinstated. They'll only be reinstated when this number hits $15, but it seems like this one is trading at a discount right now. Same thing with Dividend 15.2, 480. And right now it's about 440, so also trading at a premium. So this one obviously is the higher risk one, or the more aggressive one than DFN, or the more leveraged one with the same stocks. And FFN is pretty much the same thing as FTN, but a little bit more leverage and high yield. So those are the Quadravest ones. The one that sticks out to me the most is definitely FTN. I think it's a moderate one, because it's well over $15, and I think it has a good bang for your buck right now. ENS, 1646 NAV, and the stock price is $16.50. So pretty much the same. ENS is has been pretty good the last couple of months. It's either been trading at a small discount or very close. So ENS is a good pickup, good time to add, of course. Crypto now. So you have the BTCY, ETHY, which are the crypto covered call ETFs. It's the only way I would ever invest in crypto, because number one, they're the blue chip cryptos only, Bitcoin and Ether, and number two, they come with covered calls. So the Bitcoin one, the dividends have remained pretty steady at 4 cents. The new one just got declared. It's 4 cents again. So you're looking at about 13% yield right now. So crypto has been suffering. It kind of follows what tech stocks do. Remember, when there's fear in the market, that's a good time to be greedy. So definitely a good time to pick up crypto, guys, if ever you believe in it. If you don't, well, then don't bother. But remember, this is literally the most pessimistic way you could ever invest in Bitcoin and Ether. If you're an optimist, well, then you would probably get the non-covered call version, right? BTCC or ETHH. So the Ether one, the dividend, was 2.5 cents, and the latest one has a slight increase. I wasn't really surprised because the dividend kind of went under 10%. So I figure, they'll probably raise it a little bit. And they did. So, it's about 10% now, I believe, or a little bit over because the price dropped significantly. So really good time to pick some up, everyone. There's fear in the market. Of course, remember, these are niche assets, so always proceed with caution. And hey, if you don't believe in it, don't bother. So that's pretty much the overview of my favorite funds and what I feel are the best income-oriented funds in the Canadian stock market. Was there a particular sector that really stood out to me? It's still technology, guys. It's still technology, the one that's really suffering. So obviously, if you want to get your tech pure play, TXF is a great option. It's probably my favorite covered call ETF when it's that comes only, that's only technology. You're looking at about 11% yield now, 11.26, which is pretty good. Remember that TXF is one of the 7 ETFs in HYLD, right? So HYLD is also, of course, a great option. Here it is, TXF. Harvest has their own too. They HTA is the Harvest one, the Harvest Technology one, which is an HDIF, by the way. You see it right here. It's an HDIF. So either or, if ever you want to pick up, some technology, it's a great time because the Nasdaq is suffering. Gold producers too. So you have CGXF. But to be honest with you, I'm kind of getting disenchanted with gold producers. I mean, if you look in 2020, they shut up here. But I know gold producers, gold, it's supposed to be a hedge against inflation. We're having inflation, so what's the problem? Why is it going down? I don't know. This is why I'm telling you I'm getting a bit disenchanted. But hey, if you want gold producers, there's actually a possibility maybe it'll shoot up again. Like it did in 2020 and go to, from 9 now to 15. So if you're feeling gold producers, you could go ahead and get CGXF or GLCC, which is the Horizons one, either way. But those are really the two sectors that are, really suffering right now. It's definitely not energy or financials or, healthcare, utilities. Those are all healthcare and utilities, especially, is very defensive. So that's my overall view of the Canadian stock market. Once again, I feel like HYLD is a good pickup right now. On the split fund side, FTN probably takes the cake. If you're, if feeling a little bit more brave, FFN, DF are also good bets. ENS is pretty good. If you need to pick some of that up. With crypto, of course, now's the best time. So now let's check out my favorite funds on the US stock market and see what's going on there. All right, everyone, let's review the overall US stock market, the best income-oriented funds. So funds that use, of course, covered calls, leverage, or a combination of both. So we're going to start, of course, with the big three: QYLD, RYLD, XYLD. These are open-ended funds. They're ETFs. I'm going to add JEPI and JEPQ to the mix as well. So these are really baseline, good foundation, covered call ETFs here. So the one that sticks out to me the most, of course, take a wild guess, it's QYLD, right? It's the tech-focused one, of course. It's the one that's suffering the most right now. So out of the three, they're all three are good pickups. All three are down because, they pretty much follow the American stock market as a whole. These are three big indexes with a bunch of American stocks. But QYLD is definitely the most tech-focused one. So it has the biggest bang for your buck. Definitely the most, one of the most volatile. But, I still strongly believe in QYLD. I think now's a great time to pick some up. It's at its all-time low pretty much. So there's no better time. RYLD is the Russell 2000, also good as well. XYLD, S&P 500. So out of the three, these are always good to buy, but QYLD takes the cake for sure. And listen, if you're getting disenchanted, if you want something a little bit more moderate, instead of QYLD, instead of XYLD, you could go with JEPQ. So JEPQ is the new twin brother of JEPI, which is very, very popular. It actually has, it's beating QYLD as the number one covered call ETF right now in the US stock market. So JEPI pretty much is like XYLD, except it's a little different. It's not really the index per se. The management fee is a little bit lower, so that's a plus. The yield is, you're going to expect it to be a little bit lower as well. It's typically between 8 and 10%, whereas XYLD is a little bit higher. Same thing with JEPQ. So JEPQ is newly created and pretty much is the same thing JEPI does, except JEPI is S&P 500. JEPQ is NASDAQ 100. So they both have the same low management fee. So that's always a plus compared to QYLD and XYLD, which has 0.6 management fee. And, these ones are a little bit less aggressive with the covered call. So you could expect less covered call drag, right? Covered call ETFs will always have drag, which means that when the bull market, when the market picks up quickly, they'll always have trouble going back up. So covered call ETFs have drag. So JEPI and JEPQ seem to have a little bit less drag and are a little bit more growth oriented. You could actually expect some growth. So they're very popular. I like them, even though I don't own them myself. But I strongly still believe in XYLD, QYLD, and RYLD. Out of the three, definitely QYLD is your biggest bet. But I'm just telling you that JEPI and JEPQ are good alternatives, just in case. You want to even add a little bit in parallel to QYLD and XYLD. SVOL, always amazing. This one, I'm getting more and more impressed with it every single month. This Simplified Volatility Premium ETF, always a good time to pick it up. You're looking at 16, 17% yield with this guy all the time. I have a video on SVOL. I talked to the fund managers. Extremely unique idea where they short the VIX for great premiums, and the distributions have been absolutely super steady. The last 1, 2, 3, 4, 5 have been pretty much 32 cents a month without a hitch. So it's over a year this one is out. I couldn't be happier with this one. This one is going to be definitely one of my foundation positions in my retirement account, which, as you know, is mostly US listed stocks. Moving on to CLM, the love it or hate it and controversial CLM. Is it a good time to pick some up? I would say that the premium is too high, everyone. So this is up. Actually, the data is pretty updated, August 26th. So it's worth $784. You got to pay about $1036 for it. So the premium is too high. When this one starts getting interesting, in my opinion, is at least when it's 25% premium or less. So between 20% premium and 25% premium, it's okay. Anything between 15 and 20% premium, I would say it's a good pickup. Anything under 15% premium, I say CLM, it's a good time to pick it up because it's usually at a very big premium. Another really good one is ETW. So ETW is it's a closed-end fund managed by Eaton Vance. Eaton Vance is actually a pretty big covered call. They have a lot of covered call ETFs, and I like them because they use a little bit of leverage too. The reason why ETW sticks out to me is because, QYLD, RYLD, JEPI, all those, even CLM, they typically all focus on the American stock market. ETW, there's 40% Europe and Asia. So it's 60% North America stocks, 40% European and Asia stocks. They're all blue chips, by the way, and it's covered calls. So it's a good way to balance out a portfolio. And right now, it's only 3% premium. So it's actually pretty good. Looking at about 10% yield, or this one's usually always about 10% yield or something like that. So it's worth $877. You're getting it at $906, very small premium. Good way to get a bit of regional diversification for you Americans out there that are really just focused on, these guys here, which of course, they're the most popular and talked about income-oriented funds on the US stock market, especially QYLD, JEPI. I mean, there's millions and millions of video, well, not millions, but hundreds of videos on YouTube. I always talk about QYLD and stuff. So something like ETW doesn't get much attention, but I think it should get some attention. RIV. Now moving on to other my all-in-one closed-end funds. So I won't look at YYY from Amplify ETFs. Is always good. It's a baseline one. It's not leveraged and it's an ETF. So you can't really say, is it trading at a discount or premium? But RIV is trading at a 7.84% premium. So this premium is not so bad. This one rarely trades at a discount. It usually trades at a small premium. So RIV is, a pretty decent one. Is it really sticking out to me this month? No, not really, not yet. Then you have some ETNs from UBS eTrax. CEFD would be my one of choice. So this one is an ETN, so it's not like you could say it's trading at a discount or premium. So RIV, you have CEFD, which are my favorite all-in-one closed-end fund solutions, along with YYY. You could check out my recent video about them where I go into them in detail. But right now, CEFD is always a good one to pick up. RIV, not really sticking out to me. RA, so my favorite one on the Canadian side is RS for real estate. And on the US side, it's definitely RA, which is managed by Brookfield. It's actually a Canadian company. So this will take care of all your real assets needs. We're talking real estate, infrastructure, natural resources. So this one's a closed-end fund, so we could actually check it out. So it's trading for $19.54 and it's worth $17.13. So is it a good time to pick it up? Let's do the calculation here. 14% premium. So not the worst in the world. If ever, you need you need real assets or real estate, RA is always a good one to get. Highland Global Allocation Fund, I just wanted to show you guys this because for some reason, this boggles my mind all the time. It's always trading at a huge at a huge discount. I never know why. So I really like this fund, like RIV, like CLM. It has an annual dividend policy that resets every year based on the NAV, and it's very conservative. It's 8.5% of NAV. So it's increased their dividend last year. It's set to increase their dividend again. And check this out. NAV is 1285. You're paying 10.38 for it. So this one is trading at a huge discount, and it always is for some reason. I don't know why it's trading at a 24% discount, and the dividend is set to go up. So this one is kind of always a good one to get because it's if you're looking for a closed-end fund that's trading at a discount. Now let's look at some fixed income oriented funds. So I would say the top three or my favorite three fixed income specific or heavy on the fixed income in the US is GOF, OPP, and PDI. So GOF is trading at a 26, almost 20% premium. Not really a good time to pick some up in my opinion. OPP is definitely out of the three the one that sticks out the most. 5% discount. So it's worth 11.17. You're paying 10.61. So you're looking at a decent discount here. And I like it because these guys cooperate with River North, and 30% of the fund is the tactical closed-end fund. Right now, it's actually 70-30 exactly. Where is it? I had seen that before. Here it is. So 70% fixed income managed by Double Line. 30% tactical closed-end fund managed by River North. So, I would always take RIV over OPP, but hey, if you guys want some fixed income, I have a little bit of OPP, a little bit of GOF in my portfolio. The one that sticks out the most out of the three is definitely OPP. PDI from PIMCO. PIMCO's a master of closed-end funds, is trading at a 9% premium. So it's not so bad. It's worth 20. You could get it for 21.88. So those are my three, I guess, favorite fixed income oriented funds. All three of them are closed-end funds. The one that sticks out to me in terms of best value right now is OPP. But I'm not a humongous fan of fixed income, to be honest. But hey, some people like it. BlackRock has a lot of closed-end fund, guys, and I want to show you this because they have a really nice website. I sorted by distribution yield here, distribution rate, and their technology one, BSTZ, sticks out to me as a good buy right now because not only are you getting a yield of over 11%, and this one does do covered calls and is technology focused, which is the sector that's lagging, you're also getting a 13% discount, which is pretty cool. So if you're looking for something, a pure technology play, BSTZ sticks out to me. Biggs also sticks out to me, which is also purely technology. They recently reduced their dividend though, which is something I kind of predicted. But you're still getting almost 10% yield. But check out this discount, 17% discount. So this is definitely interesting. You also have BMES, which is the health one. So it's a healthcare closed-end fund with covered calls. Pretty defensive, very interesting. Nice yield, almost 11%, and it's at a 13% discount. So I just wanted to show you guys. This is a site that I would definitely bookmark because you could quickly see all the BlackRock closed-end funds sorted by distribution rate, and you could also see the premium to discount. So if it's a negative, that means it's a discount. So there's also a bunch of other ones that are trading at discounts like BCAT, ECAT, but they have the yields of about 8%. So this is always a good one to bookmark. So on the American stock market, everyone, the thing that really has the biggest bang for your buck, in my opinion, is QYLD. Again, if you're kind of hesitant about QYLD, you feel like it's going down and NAV erosion or whatever, all those excuses you usually hear for covered call ETFs. First thing to remember is what a covered call ETF is designed to do. And next thing I will tell you is JEPQ is a good alternative. Okay, I'll be completely honest with you. JEPI, same thing, is a good alternative to XYLD. But I strongly still believe in QYLD. It's probably, it's the biggest position in my wife's RSP account. It's on drip, so I'm happy that it's going down because we get to have some nice cheap shares. And yeah, besides that, nothing really sticks out to be too much on the US stock market. You have HGLB, of course, but this one is always trading at a big discount for some reason. I would love to interview the guy who manages it. I think he's a fellow Italian, so I'll try to reach out with him, see if he could come on the channel. But besides that, nothing else really sticks out. You have some nice BlackRock technology ones if you want technology pure play. But once again, QYLD takes the cake for value this month. Thank you so much for watching, everyone. I really appreciate it. Don't forget to hit that thumbs up button, that like button, and make sure you're subscribed not to miss out on my future content. Of course, hit that little bell next to the subscribe button so you're notified for any new content that comes out. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could purchase my digital product, the Ultimate DIY Investing Package, which is on version 4 right now. It comes with lifetime updates, so you only have to buy it once, which is awesome. So this is a companion tool. It's a reference tool that will help you build your own portfolio according to your needs and goals, and it covers both the Canadian and American and US stock markets. So make sure to check it out. I have a video explaining from A to Z exactly what the product is. I showcase it, so there's no surprises. If you're interested, make sure to check out that video. Also, right there on my website on the homepage, I do offer a one-on-one coaching session with me. So this is a 1-hour Zoom call with yours truly for in case you need personalized help. I'll answer all your questions and I'll help you best I can. Just remember, I'm not a licensed financial planner or financial advisor. These are just going to be friendly conversation, right? It's just going to be my opinions. But if ever you're looking for that personalized touch, that personalized help, you could book a one-on-one with me. Make sure to check out the message on top of that calendar. That will give you a status of my bookings for that month. Also, we do have a Facebook group, great Facebook group, over 12,000 members. So make sure to join our community. The group is called Passive Income Investing, a nice Facebook group where everyone is sharing their thoughts and opinions and sharing their experiences. So it's a really nice group. We make sure to stay on top of the scam and the spams, and we delete those right away. So make sure to join our Facebook group. If ever you want something more personalized with us, you could follow us on Instagram. That's where we post more personal things on our adventures here in Panama. So follow us on Instagram if you want. And how do I always leave you? Continue to stay safe, continue to stay healthy, and of course, stay passive. See you next time.